Let's get to the top story today. The United States and China are expected to move toward a limited and more controlled trade arrangement during the Trump-Xi summit this week. The proposed mechanism, informally called a Board of Trade, could allow both sides to identify nearly $30 billion worth of non-sensitive goods that can be traded with lower tariffs. Unlike earlier negotiations, Washington is no longer pushing Beijing to overhaul its state-led economic model. Instead, the focus has shifted toward balancing trade flows in sectors that do not raise national security concerns. The discussions come as trade volumes between the world's two largest economies continue to shrink. US-China goods trade fell 29% in 2025. And at the same time, the US trade deficit with China has narrowed nearly 32%. That's the lowest level in almost 2 decades. Energy and agriculture, they're also expected to be central to negotiations. China currently imposes additional tariffs of up to 55% on US beef, along with duties on crude oil, liquefied natural gas, and coal. The United States, meanwhile, continues to maintain tariffs on a wide range of Chinese consumer goods, including electronics, footwear, and household products. Alongside trade, the two countries are also expected to discuss a possible Board of Investment framework, although US officials have signaled caution on deeper investment ties with China. Concerns remain particularly high around Chinese investment in strategic sectors. Trade may expand in limited areas, but technology control, tariffs, and national security barriers are expected to remain firmly in place. And to discuss more on what could be the outcome of the Trump-Xi meeting happening in Beijing, we're now being joined by Dr. Jayant Menon, a visiting senior fellow at the Institute of Southeast Asian Studies, live from Singapore. Dr. Menon, thank you for joining me on the broadcast today. Firstly, let's address the broader question. How much of this summit do you think is about economics, and how much of it is about preventing further geopolitical escalation?
Thank you, and nice to be back with you. I think it's very difficult these days to actually separate those two. They are now conjoined twins, both the trade or economic sphere and the geo-economic or geostrategic. They're both linked together. I think a lot will be about the economics, having said that, and a lot will have to do with how both these countries deal with the emerging economic problems respectively at home. We have the US facing inflation, a potential slowing of growth, similarly to China, where the property market has slowed significantly, growth is slowing and youth unemployment is rising. So the scene has been set for useful, collaborative engagement between these two biggest economies of the world.
Right. Now, speaking of collaborative talks, like you said, do you think selective tariff cuts could meaningfully revive bilateral trade between the two economies, or has that relationship already structurally changed?
I think, if they do manage to get significant reductions in tariffs, it will boost trade. But I think what I want to focus on is how these numbers that we all look at, including the ones you quoted, are becoming increasingly meaningless in a world of global production and trade. The bilateral deficit is almost a meaningless number these days because so much of China's value addition takes place outside China. Similarly, US firms operate all around the world. So while the bilateral deficit might narrow, a lot of trade now involving Chinese value added comes through other countries, including Southeast Asia, where exports to China have boomed. In fact, overall exports of China reached a peak last year, even though the bilateral trade with the US slowed. You cannot hit those numbers without the US as the largest consumer market. So it's not being reflected in national accounts or trade accounts of individual countries any longer. It's spread all around the world.
Right, you're saying, they have already diversified a lot as far as their trade is concerned. But just as I was highlighting the numbers earlier, the trade between China and US, it's down nearly 30%, 29% to be precise in 2025. This is especially after all of those tariffs came into play and then were rolled back and, the whole tariff saga. But given this meeting that's happening in Beijing, how much time do you think it's going to take to fill this gap, if at all?
Well, I think, these sorts of meetings are really all about form more than content. I think it sets the stage for future negotiations that gets into the core and the details. These are always bound to succeed, these sorts of bilateral face-to-face meetings. But the real test will be what comes after. And I think, there could be commitments made on, say, the Chinese side to buy more agricultural output, aircraft and the like. And there could be some concessions on the US side as well with tariffs. Remember, a lot of the tariffs on China are still in place because they're under Section 301. They have not been affected by the Supreme Court ruling.
Right. You just said that the real test will be what comes after these negotiations happen, this meeting happens. So just, lastly, before we let you go, just wanted your take on the kind of leverages that both of the countries' economies have at this point in time. China is leading as far as semiconductors are concerned, electronics are concerned, the manufacturing sector, whereas US is leading where, there's technology. So what are the leverages that both of the economies have at the table at this point in time?
I think, as the two biggest economies, they're increasingly realizing, at least the US is, I think China always has, realizing the importance of interdependence and using that as a fulcrum to move forward their national agendas. I think, as I said earlier, both countries are in dire economic straits, and things look like worsening in this overall global climate. So they have every incentive to try and, come out with a deal that is mutually beneficial. Trade is mutually beneficial. It's not always fair, but both countries gain by increasing trade and investment. And I think, hopefully the US, which has always operated on that basis until Trump, will come back to that realization. And China, of course, is looking at improving its access to a lot of these technologies that it's been denied so far. And that will be important for its overall drive in catching up with AI.
Right. Dr. Menon, thank you so much for those insights and joining me on the broadcast today. On that note, we'll let you go.
Thank you.